Hey everyone, Mortgage Nerd here. Want to give you a quick rate update. So mortgage rates are dropping, as I've been saying for several weeks now. As they continue to fight inflation, mortgage rates are going to come down. These are the mortgage bonds. You see they dropped to their lowest point, which meant the highest rates after the CPI came out in June. Then they've been on this upward trend, meaning rates coming down. Now, since the CPI came out this month in July, it's been moving along this moving day average, really crazy, just coming along it. And then all of a sudden yesterday, the European Central Bank, the ECB, announced that they were raising interest rates to fight inflation for the first time in 11 years that they've raised their benchmark rate at the ECB. Mortgage bonds went crazy, they went up, and we've broken through these two levels. We're sitting on this, it's crazy how these things work with technicals. And we broke through these two after sitting on this one. Broke up here. I love being in this range. Hopefully we come back, we test it, we stay up in here. That means lower rates, back to where we were, more in the May time frame, solidly in the 5s. But rates could be going down to the 4s if we look at the 10-year Treasury right here. Let's go to that chart. So here you see 10-year Treasury down big time today. They were down big time yesterday off that news of the ECB, which is great. Look at their highest point, again, based on CPI in July, coming down at their highest point based on CPI in June. Then we see when the CPI in July came out, and since then we've just been kind of hovering. I was happy with this. There's videos of me talking about that we didn't go all the way up here again. So now it's dropping. We broke through this level, bounced off of this one, but we're up here a little while ago. So we might fight here in this range. Maybe we come back around like we did here, wait for the Fed in the United States to announce raising rates, and then hopefully we can drop into this range. Even into this range would be great. Let's look back at what it looks like being in that range a long time ago. So last time we were in this range right here was in April. Rates were in the 4s in March and April. And this whole range right here, rates were in the 4s. Right here, January through March, rates were in the 3s. So we could be coming back into that 4 range. I'll be extremely happy if for the rest of 2022 we're bouncing around in here, just up and down. It'll be really good for the real estate market. Inventory's up, which is good. Then you bring back some of that demand from buyers, so that'll be good. I just think rates in the 4s will be nice and healthy for us. No crash, no worries of that. Rising inventory because rates aren't in the 2s and 3s. Anyway, that's all with this rate update. Mortgage Nerd out.